Hello, everyone. Welcome back to another monthly market update. I am Kyle Kerr with Initium Real Estate, and I hope this finds you well. So let's dive right in. As always, I like to start looking back kind of at the end of January, those early February stats, just looking at some of the commentary that came from the real estate board, and then providing my own analysis, of course, on top of that. So one of the big things that probably would have been noted if you were paying attention to the end of January sales is that sales were down this January 2026 almost 20% to January 2025. And so if you look at that at face level, everyone will say, hey, sales are way down. What's going on? Is the market starting to adjust in a different way? But as the new chair, Fergus Kine, talks about, is that you can't really just take 1 month of sales and say that this correlates or this translates into a full market trend. As we've talked about the last few years, from the COVID market to the when interest rates started going up in 2022, we have really been out of our normal kind of seasonal market cycles. And normally December and January are some of those slower months. Now, if we remember going back to last year, the beginning of 2025 started off with some strong momentum because we were still kind of dealing with a unique interest rate environment from 2022, 2023, and even into 2024. And so we really felt some strong momentum at the beginning of the year as what we felt psychologically, a lot of buyers who had been on the sidelines for a couple of years potentially, when they started to realize, okay, prices had already come down, and we've talked about that in the past, that most of the significant price reductions had really happened between 2022 and 2023, although we have been in this up and down market the last couple of years as well. And when we review some of the home price index stats, we'll see that prices are still adjusting, but those big significant price drops did really happen in 2022 into 2023 when interest rates first started going up. And so we had a really strong January and February last year. And then when the US started announcing tariff measures and other global trade tensions, we actually had a slower spring last year than we normally do. But then things picked up in the summer when typically things are a little bit slower. So again, we've been really dealing with very unique markets really the last 6 years. And so what we're seeing is hopefully more of a return back to more predictable seasonal patterns, as Chair Kine talks about in this article as well. So again, we need to look at what the overall sales are, what are prices doing, and also what activity are we feeling in the market. And this is where I really backfill some of that with saying that my start to the year has been much busier even than last year, where I said there was some good activity. But definitely some of my clients, buyers that for me personal reasons or analyzing the market, they were pretty quiet the last quarter of 2025, and we've been much more active to begin the year. And in speaking to realtors I'm speaking with are saying that they're feeling busier. Now, that doesn't always mean their clients are writing offers and everything right away, but it seems that buyers are starting to come back to the market. They want to at least get out there and look. They are looking for good deals, and sometimes they can find them, and other times they're sadly mistaken. And I've shared some of those stories before with some deals that we were trying to put together over the holidays. So again, I think buyers that have been sitting on the sidelines not looking at all are really starting to want to come out. They want to see properties in person and get a little bit more detail, because if there is a property that you really like and maybe it's been sitting on the market for a long time, it's time to get out there, because some sellers are not reducing their list price. And I've had clients ask me, why aren't they dropping their price? They've been on the market for 100 days. And I say, well, there's a lot of people who really feel they'd rather not drop their price. They would rather someone come in with an offer and negotiate from there. So sometimes, again, if you want to create a deal, you have to go out. If you wait for them to drastically drop the price, now you're going to be in a situation, like I've said, that there may be other buyers on the sideline waiting for that same property. And if the seller, say, does $100,000 reduction, you may now have to compete with someone at that new price point, where if you had gone in, written an offer lower, and really tried to negotiate, you potentially could have gotten that yourself without now having to potentially compete for a property. So just something to think about. One of the other things they talk about in here is that inventory is up, and we're going to look at some of the inventory numbers in a minute. But it hasn't gone up drastically, but there are a couple hundred more listings now than there were, last year. So again, this creates more choice for buyers, again, bringing them out of off the sidelines, as well as it's really putting, I wouldn't use the word pressure, but it's really having to showcase to sellers that unless you have a very, very unique specific property that is in high demand and there's not a lot of then there's not other competition out there, then if you're going to market this year, you can still get a great number for your home, but you have to price accordingly, and your home has to be taken care of. It doesn't need to be fully updated, but if there's any of those little lingering things that need to be done, we generally are suggesting to take care of those. If it has things to do with mechanical, structural, things like that, that again, someone could really like your home, its location, but if there's a large outstanding item, with something that, probably should have been taken care of over the last few years, buyers are either going to want a steep discount on that for them to take it on themselves, or they're just going to continue moving on and looking at other properties because there is more supply. So you have to be ready as a seller. But I'm going to talk about some of the sales that have happened so far this year. And you're going to see that there still are properties that are selling in multiple offers. There are still homes selling above asking price. It's becoming a smaller portion of the market. But again, with the right strategy, the right preparation, you can still achieve a very efficient sale. So that's kind of the real estate board update, which will be included with it in this email as well. As always, I always like to quickly showcase some of the home price index pricing for single family homes, townhomes, and condos. This is going to be attached to the video, so feel free to take a look at everything there. I'm just going to tuck my little face away down to the bottom so we can see some of those numbers. I've been saying, we are in this up and down market right now, that when we get outside of it, 5-10 years from now, we're going to look back and see that it was kind of just working through some of this global tension. And similar to what I've said before, it really feels like we're kind of in that 2010 to 2014 range where, we had a more significant drop off and then things picked up, and then they've been going up and down with some decline more prevalent in some neighborhoods. So we'll see here again, when we look at single family homes across the different neighborhoods, really, as I've said a million times before, and it was nice to see the real estate board mention it, micro markets. So even here, if we look back over the last 12 months, some markets are up, anywhere from 1 to 4%. Other markets are down anywhere between 1 and 9%. So you really have to understand the market you're in. And even within those municipalities, there's going to be micro markets under that, where some neighborhoods, some areas are actually doing quite well, where other sections within that municipality are struggling a little bit more. Again, if you have specific questions on your neighborhood and your property, I'd always be happy to dive into those statistics a little bit deeper. When we look at townhomes, again, that whole missing middle segment, which has become more popular, again, we have a range of growth. Townhome segment's been a little bit flatter, a little bit more of a decline over the last year. Growth as high as about 2% out in Souk, with prices down potentially up to 6% in Vic West. So again, you have to understand where you are within these neighborhoods. And the condo market, the one that a lot of people are talking about right now. And again, as I've said in previous videos, the headlines that are discussing Vancouver and Toronto, you cannot use those as a direct example of what's happening here in Victoria. Definitely the condo market, because there are more condos available. Condos are more of a transitionary type property. More condos come up for sale. And so there will be more supply available. We've talked about the Airbnb rules and some other things. But if you look at some of the markets, Victoria, downtown Victoria, we've talked about some of the challenges there. Victoria condo prices are still down about 5% year over year. But you see places like Oak Bay, Saanich East, the more established areas are actually up year over year. So again, areas like Souk and Langford are kind of neutral. So again, you need to understand what location you're in, and it also depends on the property type. So when I talk about Vancouver and Toronto, of course, the biggest issue, of course, is developers that have built massive projects. And again, when you think Vancouver and Toronto, you think steel and concrete high rises, 40, 50, 60-story buildings. So if there's a lack of buyers, and you have 60% of the buildings still available, that's going to be a lot more units than a lot of the 4 to 6-story buildings that we see here in Victoria. And one of the other important things to note is, with Victoria, most of the development that's been happening the last few years, especially since interest rates started going up, things like the speculation tax, developers in Victoria I find are a lot more pragmatic for the most part, and they will not go out and take take the bigger risk of starting a development if they don't feel that the pre-sales are there. So there are still a few projects with some units remaining. Definitely Langford's a bit of a different animal, of course, because there's just so much new construction out there. But a lot of the cranes, because I've had people say, well, hey, there's lots of buildings going up right now. Who's going to buy all these condos? Most of them are actually purpose-built rentals. And that is also a response to the government who said we need more purpose-built rentals. There's incentives, tax breaks, quicker permitting, better financing from CMHC. So a lot of developers pivoted and said, we're going to build purpose-built rentals. We're going to sell them to investment companies. We're going to sell them to the government. And we're going to just kind of keep the lights on, keep our guys working for the next few years, still make some money, but instead of taking the bigger risk of doing a condo project and not necessarily having all your pre-sales available, which of course you need for financing purposes, they're going and building these rental buildings. So it will be interesting to see as we move forward, do developers start coming back to building condos? We're going to talk a little bit about the BC budget and some changes there that may affect new development as well. But looking at the condo market is definitely not performing as bad as Vancouver and Toronto. And again, if you're comparing new construction condos, it is functioning differently than established condos. If you're in an older building, but with larger floor plans, in-suite laundry, parking, if you have all the check boxes and your strata is in pretty good shape, there's not any large special assessments coming up or anything like that, there is a demand, especially from the baby boomer retiree demographic. They do not want to live in a 900 square foot 2-bedroom condo. They're looking for 1,000, 1,200, 1,400 square feet. I'm working with some of these people right now. They want those larger floor plans, but they can't necessarily afford a brand new condo at 1,200 square feet, which is going to be over $1 million. Like they're in that 800 to 900 range, 750 to 950. So it's some of those medium age buildings, as we call them. There's some great opportunity there if it's priced properly, if it's in good shape, and the strata is in good shape. So lots to think about there when we discuss the condo market. And one other thing that I've highlighted in the past is taking a look at some notable sales that have happened. And so again, people are wondering who's buying right now. Some people are still way too attached to the TV screens and watching the news. And I, as I've said in the past, we have to stop paying attention to all that noise there when we really realize, yes, some of that is going to affect us in slightly different ways. But again, what happens in the news and the animosity and everything between Canada and US is not impacting your decision making. It is not, if you want to make a move, don't let some of that noise affect you. And when we look at the higher end of the market, we look at some of the sales these are all the sales that have happened so far to start the year, which roughly comes in around 659 sales. There has been some very notable sales. A beautiful home in the Uplands waterfront that sold for full price at 5.75 million. A nice property in Mill Bay, really beautiful custom home that sold just over $5 million. So, I mean, in the first just 2 months, there's been 4 sales over $5 million, here. And if, again, another 4 to 5 that have sold between, closer to 5 million as well. So, people in that luxury market, because I've heard news stories, I've heard, oh, the luxury market's dry, no one's buying right now. It's just not true. Maybe there were more of these sales happening in 2021 in some of the busy markets of 16, 17, but people that are looking for premium properties are still purchasing here. We're still seeing great sales. We're still seeing sellers get great numbers. So again, some of the news and headlines around the real estate market don't always correlate to what's actually happening on the ground. A lot of that boring stuff doesn't make news headlines, where talking about negative things can really drive a lot of attention and clicks. And then one of the other things I mentioned before was what is selling, above or below list price. And so we can look at the sales to list ratio here. I'm just going to re-highlight that 1 second here. So that's looking at the low end, and then just bringing this up right here. So here we can look at anything that's above sorry, my computer's just glitching out. There we go. Anything that's up above a 1.0 means that it's sold above its listing price. And so without diving into all these very specifically, we can see though that there has been still properties selling above asking price. Now, some of these are going to be new construction where the list price, when they add in the GST, they have to report the sale including GST. So artificially, it looks like an above asking price sale, but it actually was just sold for full price plus GST. But there are some resale properties here that have been getting competing bids. I've been in a couple competing offer situations myself in the last 2 months. Again, very specific properties, single family homes in great areas that were priced properly. But again, there's been some very unique sales that have happened. So again, it's not that the market is crashing. It's not that the market is red hot. But again, we have to understand that sales are still happening. Victoria is still a very diverse, stable economy. And so there's still going to be people buying and selling here. And so again, you have to understand your specific situation and you really need to work with an agent, hopefully me, but someone to help you create a strategy. And if that strategy doesn't make sense for right now and the money you're hoping to get or hoping to pay, that's okay. But again, don't let external kind of media coverage really help you understand what the market is doing. You really need to look at previous sales in the neighborhood, current trends, and everything else to better understand if the opportunity is there for you and what you're looking to buy. And then just kind of going through, I wanted to touch base on the BC provincial budget. So I've got kind of some key highlights here. Of course, a lot of the news headlines that were dominated by this was the projected deficit. I've mentioned this before that my main concern for both the national economy, the provincial economy, and how it's tied to the housing market is the debt levels that we continue to run. I know modern monetization policy speaks otherwise, but again, I believe in social programs. I believe in all these things, but we need to understand that there needs to be efficiencies created because the path we're on right now is not going to get us ahead. We talk about spending more money for certain programs. I at least personally see some strong challenges in our healthcare system, our education system. There's many things happening that we keep paying more money for, but we're not actually getting the results. So if they keep having to go into more debt, I don't think that they're solving the problem. So that's just something high level that I continue to watch. And we're going to have to understand how that is going to affect Victoria and Canada as a whole. Again, so much is dominated by the headlines of our relationship with the US when there's so much happening internally that we need to focus on. We need to demand more from our government when it comes to how they spend our money. And again, this is not one political party or the other. I don't care which political party is in power. They need to be using our money more efficiently as the cost of living continues to grow. So the one thing there that I did know when we talk about cost savings is the government did announce that they're looking at cutting 15,000 jobs over the next 3 years. And as a government town, obviously I look at that and say, okay, is that going to remove a lot of buyers from the market? Is that going to cause people to have to sell their homes? But when you read through the finer details, they're really looking at doing that with things like early retirement, severances. As people quit or step away or retire, they're not going to replace those roles. So again, it might have a slight drag on the economy, but the fact that they're doing that over a 3-year span and doing it what looks like in a very humane and kind of compassionate way as they don't replace certain positions, I don't think it's going to have a huge effect on the market. But of course, until that starts to play out, we're never fully sure. So that's one thing to keep on. So the main key points that affect the real estate market. Anyone who owns a property over $3 million, you are now going to pay a higher property tax on the school portion of that. That is hopefully to help raise more money for our school systems, which is important. The foreigner portion or non-resident portion of the speculation and vacancy tax has been increased from 3% to 4%. The government is still touting this as a good measure to help reduce speculation. It's brought in some rentals back to the market, but really the purpose-built rental market that we're in and the amount of heavy construction we're having is solving that problem much better. But again, they're hoping that this doesn't affect the market too much. The one interesting one here about adding PST to professional services. So luckily it's non-residential strata management contracts because when I first saw the headline, again, I had to read the details. But I was initially concerned that if you live in a residential strata, your property management services just went up 7%. So they have said that it's for non-residential, but things like architects, engineers, consultants, all of those things that go into new construction just got 7% more expensive. So at a time when the government says they want to make housing more affordable, they've just directly added a 7% cost onto that. And if you haven't built new construction before, architects, engineers, water consultants, tree consultants, all those services, all those soft costs that get built into a project are now going to be passed on over to the buyers as they bring these projects through. So I understand the government's trying to raise more money to help offset some of the deficits and expenses that they're running, but I find that this is very counterintuitive to what they're saying about making housing more affordable. So we'll have to see how this plays out, but this could cause some projects not to move forward. And I'll talk about some of the comments. And some of this actually was shared by my mortgage partner, Colleen Haslett. She did a great job summarizing some of this stuff. So I'm kind of stealing some of her great work. But of course, check out Colleen, who's going to have a mortgage rate update in this email as well. And if you have mortgage questions, again, talking about strategy like I did before, you make sure to reach out to Colleen because she can put a great strategy together for you in building your mortgage plan for this year or refinancing or whatever that may be. And the other one for any of my clients that are retired and that have been deferring their property taxes, you've probably already caught this, but they are changing the interest rate that your deferral will be. So they've added, it used to be at just prime, now it's prime plus 2%. So depending on how much you've deferred on your property taxes, that expense is going to continue to trickle up. So it is somewhere where it may be better for you just to pay off those property taxes with some of your investments if you do have them, and potentially, incur that cost somewhere else. But again, as that's going to continue to compound, that cost can really add up. So depending on what your estate planning looks like and other things, you may just want to keep deferring. And when when your family decides to sell the home, then, they can pay that out. But it is something that will be very interesting. And there's been a lot of pressure from rental groups and others that have said that the property tax deferral program wasn't fair. I tend to disagree, but there's been a lot of pressure on government to change that program. So it is a program that I would continue to watch, that as the government needs more money to pay for this deficit and this budget spending, they may start looking at some of these programs and start to cut back. So again, something to be very aware of. I've got some comments in here. We're going to include this, but again, when you raise construction costs, when you raise holding costs, it generally tends to slow down development. So on the flip side, if you're a homeowner and there's less development, that means there'll be less supply, and so you'll have less competition. So that could potentially buoy up prices a little bit. But again, if you're a buyer and you think less supply is going to be coming on the market, when this market does pick back up, as markets always do, there's going to be less supply available, which means more competition and more upward trajectory on prices. So again, I think the government's trying to manage a lot of different avenues here, but again, I think some of their policies are a little bit counterintuitive, but we'll have to see how that all plays out. So I'm going to leave it there for today. I've gone over 22 minutes again. I try to make these as short and sweet as possible, but I do hope you find this information useful and valuable. And again, if you have any specific questions or a topic you'd like me to cover in the future, I would be happy to do so. But in the meantime, make sure to check out some of the events and things that we're sharing in the link below. And if you have a company or an event coming up and you want me to share it with my network here, I've got, I don't know, about 1,200 people that this video goes out to. So again, if there's people that you want to see, you want help sharing it on social media, please do let me know. Again, you can find me on Instagram at initiumre. And also there's some great featured listings at the bottom of this as well. So we've got some great properties. Actually, one of my listings, my great townhouse listing on Wilkinson, we were able to list that property. We went in with a great strategy, great pricing, and we got an accepted full price offer first day on the market. So my clients are very happy there. We're just working through conditions now. But again, with the right strategy, with the right work and preparation, we can achieve a great success for you, which is going to allow my clients to move on and move into their next steps more efficiently than we had hoped for. So anyway, lots to share, lots to talk about. I'll be back next month with more updates. Thanks again. Talk soon.